Hello and welcome to the third episode of the series How to Start Trading Stocks as a Beginner. Firstly, as you can notice, I'm back, and from today onwards I will be recording videos again with my own voice. I hope you like this change, and please tell me in the comments what do you think about the quality of the sound. My name is Algo Trade Pro, and let's jump to this new episode of our stock trading series. So, in the first two episodes, we defined the conditions and risk management rules of our strategy and analyzed more than 50 different indicators to select our trigger indicator, so the indicators that tell us when to enter in a position. Today, we will continue our deep backtesting work, but this time to select our exit indicator. If you are not familiar with my work and don't understand what this series is all about, let me explain. I am on the journey of creating from scratch a portfolio of different trading strategies while I record the whole process for you. My main objective is to give you the right tools and knowledge so you will be able to build your own strategies too. So if you like this type of content, don't forget to show me your support by subscribing my channel and liking this video. So far, I have built two strategies, one for the crypto market and another one for the forex one, based on the NNFX method, whose series you can watch on my channel. And in my Discord community, which by the way is absolutely free, you can check all the real and live results of these strategies. The link to my Discord is in the description. I am also going to leave on the description the link to the last two episodes of this stock trading series, which are fundamental for you to understand what is going to happen today. So if you haven't seen them yet, go check it out. Let's now talk about the exit indicator. So in the last episode's backtest, we would close a position if our take profit 1 or stop loss was hit, or if our trigger indicator gave an opposite signal during an open trade. Now, in addition to these conditions, we will also exit a trade when the exit indicator says so. An exit indicator is usually a momentum or trend indicator that is faster than our trigger indicator, which gives us information about the short-term trend and that is used to verify the best time to exit a trade. It is used to reduce losses, maximize profits and manage risk by providing a signal to close a position when certain criteria are met. I will give you a simple example. So, as usual, I'm on TradingView, which is, in my opinion and experience, the best trading platform you can use, and that through the link that is in the description of this video can get you $30 to use on it. We have our strategy at the moment, which is pretty simple. For a long position, the purple cloud has to print a buy signal, and for a short position, it has to print a sell signal on the chart. So, in this short trade example on the Apple stock chart, although the trading setup was pretty promising, due to the fact that not only did the purple cloud give a short signal, but the price also broke a strong support zone, there was a huge gap up that turned this trade in a losing one. But what if we used an exit indicator like the parabolic SAR? Will the results be the same? Let's insert that exit indicator on our charts to find out. To do that, let's go to the Indicators tab, search for the parabolic SAR and click on it. So, as you can see, this indicator is a technical analysis tool used to identify points of potential stops and reversals. It wouldn't be a good confirmation indicator because it changes direction too quickly, but maybe it could be a good exit indicator. As you can see, when we entered the trade, the parabolic SAR already showed signs of a bearish trend because its dots were above the price. But keep in mind that for a valid entry signal, the information from an exit indicator has no use to us. The trade unfolds, and at this candle, the parabolic SAR dots flipped and showed signs of a bullish trend. So, if this was our exit indicator, we would close the trade at this point, and instead of taking a full loss, we will just have a smaller one. And just like it closes earlier losing trades, an exit indicator can also close profitable trades at the best possible time. In recap, an exit indicator will, in practice, decrease the average loss of our strategy thus increasing our average risk-to-reward ratio. It will decrease the swap and commissions paid to the broker, and it will decrease the drawdown of the strategy while increasing the net profits. We may see a slight decrease in the win rate of our strategy, but that won't be a problem because its efficiency will increase. In addition to these new criteria, I will also use a trailing stop loss after the take profit 1 is reached. This trailing stop loss will always be 1.5 times the ATR pip value behind the price, in order to protect our trades in case of a sudden price crash. Therefore, to discover which exit indicator will join our stock trading strategy, I'm going to perform an InSample backtest on several different indicators with this function and on the same 7 stocks used in the last episodes. And then I'm going to show you the results before moving forward to the hour of sample test. Let's go! So at the moment you are seeing clips of me testing several different indicators with the exit function. I am performing these backtests with the help of my backtesting bots and taking note of the indicator stats. And yes, for each indicator that I analyze, I have to make changes in my bot's code. It takes some time, but it is a crucial step. And, of course, in this way the backtest process becomes much faster. In 1 hour I can probably make backtesting work that will take you some months or even more to perform manually. The idea is that after the end of this backtest to several indicators, I will be able to compare them and discover which ones were more efficient. So now I will let you see some more clips before showing you all the results. And after analyzing 30 different indicators, here we have all the results. Here we have the individual results of the purple cloud indicator with the fixed take profit, and down below we have the stats for each exit indicator I have tested, including the trailing stop loss. As you can see, although the win rate dropped, which is something absolutely normal, with some exit indicators the net profit increased and the drawdown decreased, just as I told you. Regarding the number of trades, they are the same ones. The only difference is that when I implement the exit condition, my bot divides the risk per 2 trades to be able to close 50% on the take profit 1 and the other 50% when the exit criteria are activated. So, although I have 4,108 trades in every exit indicator, they correspond to 2,054 valid trading signals from our strategy. As such, after analyzing each one, the 3 indicators I considered that were the best ones were the tricks and the parabolic SAR due to their win rate, and then the MACD to the increase in the net profit. I jumped the relative vigor index due to the fact that the net profits didn't increase as much as I expected. So now, to find which one out of these 3 indicators is the most consistent, I'm going to apply them to the same 7 stocks, but on my out of sample data. This will be a faster backtest. And here we have the results of both samples of the 3 best tested exit indicators side by side. As I mentioned in my other strategies creation series, for an indicator to be consistent, it should not have a difference greater than 15 to 20% when comparing stats, and as we can see, the 3 indicators respect this rule and prove to be quite consistent. But since we only want one, then we have to evaluate other metrics. Firstly, when looking at the MACD, we can see that it was the indicator with higher drawdown values and lower win rate ones, and so for this reason I am going to eliminate it. Then, when comparing the other 2 indicators, we can notice that both the win rate and drawdown values from the tricks indicator are better than the ones from the parabolic SAR. But regarding the net profits, the parabolic SAR has higher values. And so, in order to make an informed decision, I calculated the average values of the total return over a max drawdown ratio from both indicators, where we can conclude that the value from the parabolic SAR is greater than the one from the tricks. Note that these values are the average ones. in the robustness test phase of this stock trading strategy, I will calculate the net return over max drawdown ratio with more precision. As such, it is easy to conclude that our exit indicator for our stock trading strategy will be the parabolic SAR. Of course, you can and should do your backtests to find out if this indicator can work well in your strategy as well or not. And to simplify that process for yourself, if you want, you can have full access to the trading bot that I created for this stock trading strategy in order to carry out a backtest in seconds with the most real and efficient results possible. For more information, check out the description. With the help of my trading bot, I performed some optimizations on the parabolic SAR and I was able to smooth out the results even more. As you can see, by using an increment of 0.025 and a max value of 0.3, I was able to increase the efficiency and consistency of both samples and also the average return over max drawdown ratio. And so ends today's episode. On the next one, we will address another indicator that will make all the difference in our strategy, and I will again perform several backtests with my samples and I will show you the whole process. So don't forget to subscribe to my channel and turn on the notifications so you don't miss any episodes. I hope you enjoyed it and above all that you learned something new. Be well, thank you, bye bye.